In the world of cryptocurrency trading, understanding volume is crucial for making informed decisions. In this video, we'll explore the pivotal role that trading volume plays in technical analysis and how it can significantly impact your trading strategies. Whether you're a beginner just starting out or an experienced trader looking to refine your approach, grasping the nuances of volume can elevate your trading game. We'll discuss how volume can indicate market strength, help identify trends, and signal potential reversals. By the end of this video, you'll have valuable insights that can enhance your trading strategies and improve your overall performance in the crypto market. So, let's dive in and unlock the secrets of volume together. In cryptocurrency trading, volume refers to the total number of coins that are bought and sold within a specific time frame, such as an hour, day, or week. This metric is essential as it reflects the level of market activity and investor interest in a particular cryptocurrency. High trading volume often indicates strong demand and can suggest that a price movement is more likely to be sustained, while low volume may signal a lack of interest or potential price stagnation. Additionally, volume indicators, such as the volume moving average or on-balance volume, play a significant role in technical analysis. These tools help traders assess market trends and make informed decisions by providing insights into the strength or weakness of price movements. Understanding volume is key to navigating the crypto landscape effectively. The relationship between volume and price changes in crypto markets is a critical aspect of trading. Typically, increasing volume often precedes significant price movements, signaling heightened investor interest and activity. For instance, when Bitcoin experiences a surge in trading volume, it often indicates that a price breakout is imminent, either upward or downward. Volume spikes can serve as powerful indicators of potential trend reversals. A sudden increase in volume during a downtrend may suggest that buyers are stepping in, potentially leading to a price recovery. Similarly, Ethereum has shown instances where volume spikes coincided with major price rallies, reinforcing the idea that monitoring volume can provide valuable insights. By understanding this relationship, traders can better anticipate market shifts and make more informed decisions. In technical analysis, several key volume indicators can help traders make informed decisions. One popular indicator is on-balance volume (OBV), which combines price movement and volume to indicate buying and selling pressure. A rising OBV suggests that buyers are in control, while a declining OBV indicates selling pressure. Another essential tool is the volume moving average, which smooths out volume data over a specific period, helping traders identify trends and potential reversals. For example, if the current volume exceeds the moving average significantly, it may signal a strong trend. In real trading scenarios, if Bitcoin's OBV is rising while its price is consolidating, it could indicate an upcoming breakout. By utilizing these indicators, traders can gain deeper insights into market dynamics and enhance their trading strategies. Incorporating volume analysis into your trading strategies can significantly enhance your decision-making process. Start by analyzing volume alongside price charts to gain better insights into market dynamics. Look for patterns where increasing volume confirms a price trend. For instance, if a cryptocurrency is rising in price with high volume, it suggests strong momentum. Conversely, if you notice a price increase accompanied by declining volume, it may signal a potential reversal. Additionally, use volume analysis to identify potential trend reversals by watching for volume spikes during price corrections. It's also crucial to combine volume with other technical indicators, such as moving averages or RSI, for a more comprehensive approach. By integrating these elements, you can develop a robust trading strategy that leverages the power of volume analysis effectively. In summary, understanding volume is essential for grasping market dynamics and making informed trading decisions in the cryptocurrency space. We discussed how increasing volume often precedes significant price movements and highlighted the importance of volume spikes as indicators of potential trend reversals. Key takeaways include the relationship between volume and price movement, as well as the practical applications of volume indicators like on-balance volume and volume moving average. By incorporating volume analysis into your trading strategies, you can enhance your ability to navigate the crypto market effectively. If you found this video helpful, please subscribe to our channel, like the video, and share it with fellow traders. Don't forget to explore our related content for more insights and tips to elevate your trading journey. Until next time, stay informed and trade wisely.